Okay, pound Aussie. Similar to the Euro Aussie and the Euro Kiwi. It's got this zone here. I'm going to delete this. I always love a new month because then you can, I don't know, it's a fresh look at things. So I do believe this was the one. No, it was Euro Kiwi that, or it was pound Kiwi that I was thinking about. Looking at all these time frames, so last month did not close well as far as the bulls are concerned. You can see it's been rejecting this zone very, very well. So I think this wants to switch trends, and I think it's going to head down. So based on that, again, it's still way above this bullish moving average, or sorry, the 200-day moving average. So price is bullish. That's what I'm getting at. So as far as shorting it, we're definitely not doing it yet, but soon possibly. So we'll delete these. Price has to break this zone, or at least come back up and reject this zone, and then we could consider it. Figuring out this monthly range here. I mean, this one moves a lot. It's about 700 pips, so if you can get in on the top of this trend change, you make some good money. So we will move these over, and then right now we're going to set this right here just because we don't have much to go off of. So we'll make this 193.5. We'll make this 185.5. That's your 700 pip range right there, so that's perfect. And then as of right now, yeah, all we really have to go off of is price coming back up to this zone and rejecting it again, and counting on the fact that it's rejected this area so many times that it's going to do so again, and then eventually this moving average catches up and the other moving averages catch up. The 4-hour one already kind of did. So ideally what's going to happen here is price is going to come up to this zone, this 193.5 level, start rejecting. Right now there is bullish structure. You can see higher highs and higher lows. So you see price come up to here and then get rejected and come down, and then you want to see structure change. You want it to go like this, and then you're most likely, by then it's crossed back over this moving average, price is below the 4-hour moving average, and then you're good to go to enter that short position because you have the confirmation that the bears are in the market. So we will find our little September marker here. So this is our monthly range, and this is what the type of position that we're looking at, right to this bottom area, which is a super good place to target because price has already been here before and it's within the range. It's 700 pips. That's what this pair usually moves in a month, so everything's very reasonable with this trade. It would have to break this area, so that's the only area that I'd be cautious about. So I mean, even if you wanted to be more conservative and get out of the trade early, or just have a shorter target so you can get in, get out quicker, no problem. You can shoot for this zone. If you wanted to close half your position once price hit this zone, you could, but I would hold it for the full thing here and shoot for that 185.5 level and get the maximum amount you possibly could out of that trade. So there's no sense in taking small trades if you could take the same trade but just bigger and get more money. So with less entries equals less risk. So that's the way I look at it. So wait for price to come back up, be patient, let it come up to this zone, let it create its new structure, and then head back down and take advantage of that full move. So that is pound Aussie.